Good afternoon everyone and welcome to the Forex Weekly Review. My name is Richard Faulkner and this is Forex Investments. Current date being the 6th of June 2016. Now we're going to do the weekly review as per usual. So we'll go through the majors, see if there's anything we can take out of the market for the following week. And then we're going to do something slightly different. And the reason we're going to do this is because the EU referendum is coming up in 3 weeks' time. And there's an opportunity to take a trade with very, very little risk in the market, and the potential upside is absolutely massive. So I'm going to show you how to position yourself, and it's going to be via an option trade. So before everyone starts switching off, because I do understand a lot of people don't trade options, I'm going to show you exactly what option is, how to position yourself for the EU referendum, and how to take advantage of whether it's a staying in result or a coming out result. There's money to be made either side, and this literally is a once in a lifetime trading opportunity. And the reason being is because if we do come out, the average consensus is that the pound's going to drop 20%. Now that is 3,000 pips. So you don't want to be in the market, in the spot market, if we come out of the EU and you're on the buy side. And the reason being is because you're going to get filled anywhere up to 3,000 pips below the current price. So in effect it could be a rerun of when the Swiss bank removed the support level on the Euro Swiss, and obviously you know the repercussions of what happened with that. So the difference is this time is we know it's coming, so we can actually position ourselves for this, and you do this by trading options. So let's just quickly go through the basics, and I do mean the very basics. You can spend months on this and still have more to learn, but very, very quickly. And don't worry, we're not an option trading room. We are a spot forex room, but like I say, this is a once in a lifetime trade, so I'm going to show you what to do with regards to this. So a call option is a buy, so you think the market's going to go up. If you're buying a call option, so call option is going to buy, it's going to go up, and this is what we did on the euro, on the NFP. This is a spot trade, but I'll go through the option trade, which we bought down here out of the money here. And we did very well on it. But anyway, call option is a buy, and a put option is a sell. So you will buy a call option if you think the market is going to go up, like it did on Friday. Euro USD. Now the difference is you will buy a put option if you think the market is going to go down. Now you don't sell a put option, and I'll go through these two very, very close distinctions between buying and selling options. It is vital that you get this right. You get this wrong and you're going to have unlimited risk in the market. And the market is going to go and do the opposite thing to which you want. So very simply, a call option is a buy, a put option is a sell. Okay, so those are the basics. If we think the market is going to go up, we buy a call option if we think the market is going to go up, but we also buy a put option if the market is going to go down. Okay, so just bear those two things in mind. You're very. I mean, selling options is a different ball game, and I don't really want to go into it for the purposes of this example. So just consistently think we are buying an option. If we think the market's going to go up, we buy a call option. If we think the market's going to go down, we buy a put option. Right, so if we go back to Friday and we use Friday as an example, this is a snapshot of the trade room. It's on our Facebook page, and at 12:27, so about an hour before NFP came out, this is what I put in the trade room. So if anyone trades options, I've bought an out of the money, and I'll explain this, an out of the money 1160 daily call option on the euro for the NFP. It's a low risk trade on a directional play. Okay, so I'll go through exactly what I mean by this, and I'll use the example here as the euro. So at 12:30, which is obviously, bear in mind that MetaTrader is 2 hours in advance. 12:30 is this bar here. Okay, so this at 12:30, the price is 11. Call it 11 for argument's sake. 1140. The option at the money option was 1140, which is this round about this price here. So 1140. If the price is at 1140 and you buy the 1140 option, it's called an at the money option. So you've got to ask yourself, why would I buy an 1160 option? Because that's a 20 pip disadvantage here. Well, the reason being is this option here is cheaper than this option here, because you have to gain that extra 20 pips in the market in order to see, not always see money, depending on the volatility of the option, but you need to gain that in order to start making money. So therefore, you're putting yourself at a disadvantage by buying an option which is much higher up here, but it's cheaper. Therefore, you're risking less money in the market if the option goes wrong and goes against you. Now we know NFP moves the market at least 100 pips, so 20 pips to me I'm not bothered about, because we know in an hour's time the market's going to move at least 100 pips. So I want to negate some of the risk in case this trade goes against me. So this is why, instead of buying an at the money option, I bought an out of the money option. I'm still buying a call option, so I still thought the market was going to go up, and I bought the option there. The price was here, I bought the 1160 option, and then quite fortunately the market started to move up straight away, and by the time we got here we were actually in decent profit, because volatility was rising before the NFP. So anyway, that was basically the play on Friday. So I thought the market was going to go up. It was a directional play. NFP was coming out. I bought a cheaper option at this level here as opposed to at the money option here, with thoughts that the NFP data was going to be bad and the market was going to rally significantly. So that's why I bought that trade. Now if we have a look at the pricing system, because hopefully this will explain it a lot clearer to you, and we're going to use IG index, and the reason we're going to use IG index is because you don't need a massive account in order to trade options. Usually really you're going to be looking like a £50,000 account to trade options and make a decent living on it. So in effect, IG index will let you trade very, very small amounts, anything up to £1 on the options, and you're not going to be risking huge amounts of money, and it's great for beginners because you do need to practice this. So look, we're going to have to take an example of where we are here in order to show you this, because obviously the market is shut now, but we are roughly, if we call it the 1360 level, that's the at the money option, 1360. Let's bring across this option book and show you exactly how we'd do that trade as if NFP was coming out now. So these are your option prices. To find them on IG, we just you go to your Finder. So let's do this. Finder. Go to options on FX majors. So it's just Finder, options on the FX majors, which is down here. Euro USD. Double click on that. On the dailies, we can have weekly options, monthly options. You choose any one you want. The further out you go, the more expensive the option is going to be. So daily options cheap, weekly options more expensive, monthly options even more expensive. The reason being is you've got more chance to make money. It's pretty self-explanatory that. So basically, if we have a look here, so let's say for argument's sake, 1360, this level here is at the money call option. So 1360, we've got NFP coming out in an hour. We're at 1360. If we thought the market was going to go up, we will buy, and that is £19.50 per unit. So if you were to put £1 on, your maximum risk would be £19.50. So you would, if this option tanked and went below and closed below 1360, you would lose £19.50. So if you put £10 on, you would lose £190 and 50 pence. If you put £100 on, you would lose £1,950 on that option trade, and that is the maximum loss you will have. So now you can see how this is going to start to benefit us when we come to trading the EU referendum, because we're not going to get slipped. It doesn't matter if the price goes down 3,000 points. The maximum loss you're going to get or have is £19.50 on one single unit. Okay, so that's at 1360. Now, for argument's sake, I think NFP's in an hour. I think the price is going to rally, and it's going to rally massively. Well, if that's the case, I'm going to buy a cheaper option, because there is still a risk that the price could tank. So instead of buying the 1360 call option, which is here, why don't we have a look 20 pips higher and have a look at the 1380 call option. Now, 1380 call option is £10, so that's half the price of the call option. So in effect, if this tanked and you lost, you would then only lose £10 per unit. And this is all about risk. This doesn't matter about how much you're going to make. Forget about how much you're going to make. It's all about risk and how much you're going to lose. So, in effect, I think there's a very, very good chance the market's going to move 100 points. So 20 pips isn't going to make much of a difference. The fact that the option's half the price 20 pips further up makes a lot of sense to buy an out of the money call option. And this is the key to this EU referendum trade. So, if we go back to what I said on the Facebook page, just to remind everybody, if anyone trades options, I have bought an out of the money 1160 daily call option on the euro for NFP. So I think it's going to go up when NFP is released. Current price is 1140. I've put it's a low risk trade on a directional play. So instead of risking, I put £20. I bought a £20 option. That's it. It is NFP. So instead of risking, the prices were slightly different. Obviously, the market's closed. Instead of risking £380, all I risked was, in this example, £200. Now, they were slightly more expensive at the time, but buying a £20 option, all I risked was £200 on this particular trade. and that would be my maximum loss on this particular trade, and you have unlimited upside. So that was it, and that was the result. So we closed, I think we closed roundabout here. So literally that's the NFP result. A minute afterwards we closed as the bar was moving up like this. So I think we got 70 pips of movement, because 1160 is here. So we've got around about 70 pips of movement on the option within a minute. It's about a minute and a half. And then I closed the option, and that was it. Job done. And the maximum loss I would have taken on that was £200 in this particular example. Now, that's great. That shows you exactly how to trade an option, what you're looking for. But what we want to do with regards to the EU referendum is take as little risk as possible, and not bother what the actual result is. So what we're going to look to do now is do something. Just bear with me a sec. Okay, so basically what we're going to go through now is called a long straddle in the option market. And this is how we're going to position ourselves for the EU referendum. Now, the reason being is that there's a chance of a 20% fall on the market if we come out of the eurozone. Okay, so bear that in mind. That's a 3,000 pip move. They're actually pricing this as a 70% chance of us staying in the market. So while the opportunity to make 3,000 pips on us coming out of the EU is very, very slim, unfortunately, but there is still a chance. Okay, so that's all you need to know. And basically, if it does happen, it's going to happen in a blink of an eye. So what we want to do now is position ourselves in order to take that possibility into account, but also not lose any money should we then stay in the eurozone, and obviously thinking that the price of the pound will rally should this happen. Okay, so what you want to do is do something called a long straddle. Now we're probably going to do this example as at the money example, and all you want to be doing is buying a call and buying a put option at the same time. So in effect, if we go to let's just do what the current price is now. So to buy a call option at the money is 13.60. Sorry, at the call price is 13.60, which is this one here. So £19.20 a unit, and then to buy a put is £11.80 per unit. Now you've got to ask, why would you do that? And the reason being is there's a very small chance that the market could dump, and if it does, you're going to make an incredible amount of money. There's a much bigger chance that the market could rally. So you're going to make a little bit of money, but you're covered for the downside possibility. So in effect, if the market rallies, you're going to lose £11.80 per unit. But if the market dumps, you're going to lose £19.20. But the downside effect is going to be substantially more, up to 3,000 pips to the downside. So you're going to make a huge amount of money should we come out of the EU, or you're going to, in effect, if we stay in, see the market rally, and we're going to make a little bit of money but cover the downside loss on the market. So let's just explain this on the chart. Okay, so here's 1360. This is this level here. So let's bring this level let's do this over here. Keep those and put those there. Put those there. Put that there. Okay, we're going to get rid of this fib. Right. So, and then nearly finished, and then we'll go on to the weekly review. And I hope I haven't laboured this point too much. I probably have, but it is a very important point. Okay, so say current price is here. This is your expected downside move, and this is your expected upside move. Okay, so we're not going to rally as far as we're going to drop. Okay, so if we rally, that's going to be all profit on the call, and if we dump, that's going to be all profit on the put. Okay, so it doesn't matter either way, we're going to make money. But what you have to take into consideration is your loss on the call. If the market dumps, then you're going to lose money on the call side. So instead of having all this as profit, you're then going to have something like all this as profit, because you've bought a call option as well. So in effect, that is your break-even margin if you're buying and selling a put at the same time. So on the upside, obviously we have the same issue because we have a call, we've bought a put option as well. So if we stay in the EU while we expect prices to rally, we still have to see prices rally past a specific point in order to make a profit. So now I hope you can see that the reason this is being a once-in-a-lifetime opportunity to trade the markets with very little, almost no risk. There is no such thing as no risk, but this is your long straddle, and this is how you're going to make money on the EU referendum. The reason being is because you have potentially such a huge amount of downside, 3,000 pips, that you do want to have exposure to that market. You don't want to have exposure to that market in the spot market. You want to take this in the option market. If we came out, you're going to make masses of money, huge amounts of money on the option, depending on the price of the option to the upside. If we stay in, you're going to possibly make a little bit of money, or at the very worst, we're going to break even. And there is still risk in the trade, because if you don't go past this level, which is very, very unlikely, then you're not going to break even. And if we stayed still and did bugger all, there'd be issues there. But the reason why I'm saying this is such a once in a lifetime trade is because we know the market's going to move. You know, we've got advance warning. We've got everybody saying there's going to be a 20% move in the price of the pound if we come out, providing that a lot of the price action is not factored in to the market before the referendum. And we also know that it's going to be clear sailing after the referendum, and the pound is going to rally and rally substantially. And this way you can have very, very little risk in the market and make some very decent money. And that's your option trades. That's the long straddle. I've probably laboured this horribly and made a complete hash of it, but this is what we are going to be looking at in the market coming up to the referendum. Now, finally, just very, very quickly, let's have a look. what we're going to be looking at with specifics is we're going to be looking at a very cheap out of the money put option, because literally have 3,000 points of movement possibly on the table. So to negate any risk on this trade, we're going to look significantly out of the money on the put option, knowing that we have 3,000 pips to play with. So you can pick up. I know that options people pricing options aren't stupid. They're going to price these expensively. So you're going to have to think about this, and you're going to have to practice this. This is why I'm bringing this to you 3 weeks in advance, because the price of the options are going to be very, very expensive leading up to this EU referendum, and you may want to get into the market a little bit earlier. Things you have to take into account with that is obviously time decay, but just put options trading into a web browser, and it'll tell you all about that. But at least you got three weeks to practice this. So we're going to look for very, very cheap out of the money put options. Simple reason being is we've got 3,000 pips, and the risk is to the upside, not to the downside. So in effect, you got a 70% chance of this market rallying. So we'll look for a cheap put option and probably an at the money call option leading up into the referendum. We may buy the call option a week in advance to the put. Simple reason being, we'll probably see the price start to get built into the market before the referendum actually happens, because I think we're going to stay in. So you'll see the pound rallying. Maybe this is the start of it right here. But anyway, that's what we're looking at, and that's where we're going to go with that. Okay, enough options. I've laboured that horribly. I do apologise, but at least it'll give you some sort of guide into buying and selling options and what you should be looking at in the market. Okay, let's get back to it. We'll get rid of this. Okay, last week we said we want to be buying euro, and it's turned out pretty good, to be honest with you. Always wanted to be buying the euro for this week. We came down to the level we wanted, absolutely fantastic, and then we started buying. So let's just clean up this chart. I think I've probably just deleted all my trades off. No, still on. Excellent. Right. Okay, last week we said here was base camp on the euro. This was 27th of May. Let's have a look. 27th of May is Monday. So we said, look, here's base camp. I want to see price come down below this level here. That was Sunday. This was Monday. We want to then see, we were actually long the market here. We got stopped out, rolled over, and then bank holiday shot up. Now that was great, superb. With that trade call, obviously we're only looking to buy the euro, and these were our trades here. So I've been through this on another video. Lots of trading, filling our boots. Really, really good couple of days here. Another good day here, just buying the market, and then into Friday we had stops down below here. We took this before NFP. I didn't want the exposure in the underlying asset going into NFP. So time, let's have a look at this. So this is the trade here. So we bought, obviously stops were down here. We bought the price here. I think we had a 10 pip stop on it. 4 pips drawdown. NFP, this was it. 15.20 was when we came out of the market. Reason being, I'm sure that's priced wrong. Anyway, time's wrong. Anyway, it doesn't matter. So 15.20, time's ticking away. We made a reasonable amount of profit, 11 pips on the underlying asset. We had the option call at 11.60 as well, so I didn't mind coming out of the market on the underlying asset. We then took off and did this, and what a trade! Absolutely fantastic. So, what are we going to be looking at next week? Okay, well, I mean, it's pretty obvious. You just want to be buying the euro. There is a level higher up that I possibly might look at selling. But at the moment, the level of where we're going to buy is going to be down here. 13.20. So, euro. We're going to be buying anything south of 13.20. South of 13.20. Got that right? Yep, 13.20. That's where you want to buy the euro for Monday. Where we want to be selling the euro is this level here. Now this level here is, I'm going to put that there. This level here is and remember we're on daily charts here. This level here is the right shoulders of a head and shoulders. And it also happens to almost be the 786 retracement. So your zone for selling the euro, should you want to, and it is risky, is around about 1463 up to 1507. And there's your sell zone. So we're buying the euro, 13.20, selling from 1463. And those are the trades on the euro. Simple as. And the reason why we're buying down here, again, very, very simple. Go through this. On daily, we're in an uptrend. Come down to the 61.8 fib. Spot on. And there you go. That's why you're buying the euro, and what a result it was. We were buying it all week. All this is laid out in the previous week's weekly Forex review. So you go back, check them all. We call the markets at the bottom 90% of the time, and then there's your direction for the rest of the week, and just buy. And you see here, buy. Never sell. Always look for buying. This case slightly different. We're going to buy at 13.20. We're going to sell at 14.63. Be careful up here. This is a big buying bar. Fed market's actually pricing in a rate rise now in January 2017 for the Fed. I mean, they were bad numbers. They were really bad numbers that came out on Friday. And there's not only that. There's obviously the British EU referendum is making things very difficult for the Americans to actually put any strategy into place with regards to the rate rise. If there is a chance we could come out of the EU, and if that happens, it is going to have a worldwide effect on all the markets. So that's why the Americans are a bit wishy-washy at the moment with regards to interest rate decisions. So with this in mind, buying the euro strategy is a very, very valid strategy. So just be careful coming up to 1463 and above with regards to selling. Pound. Let's have a look at this. Okay, last week's weekly review, we said buy the pound at this level or buy the pound at this level. Well, smashed it again. Okay, so we didn't get this level. It doesn't matter. If you have a losing trade, it doesn't matter. We've got a fantastic day on the euro, fantastic week on the euro, and then you've had a cracking week on the pound as well. So going into next week, great bit of buying. The problem being is we've also had this selling come into the market here. Now, this concerns me. This concerns me a lot, actually. And the thing about the pound is, obviously leading up into the EU referendum, we're going to start to see the pound doing some pretty violent swings, depending on whether the Leave camp's leading or the Stay camp's leading. This here was a poll. This price action here was a poll where the Leave camp actually saw a bit of a gain over the Remain camp, and that was, it's a huge move for 2 days, 320 pips, but that came out then, and that was a 250 pip down day. So just be very, very aware, and if you are taking pound trades, then just be very careful. So what we have here is we have stops above this level here, and we have stops below this level here. Now we've got the market finish with downwards pressure here, which is concerning. So what I'm going to want to see is possibly, if we come out Sunday, take the low, be very careful with this trade. Just have one crack at it. If we take the low, we could go and see higher. What I would prefer to see is we come out of the box, we go considerably higher, retest this low here, and then smash the market. I would go in particularly heavy if we did that. If we do this, it'll be a small trade and it'll be one crack at it. If we do this, it'll be a big trade and it'll be a seriously. I'd have a few cracks at that, actually, to be honest with you, if I got stopped out. So those are two possibilities. If we don't do any of that, if we don't go higher and we do something like this, I would be very reluctant to buy this market here, because that is just a liquidity grab above here with these stops and then a move down. So in effect, stops are going to be up here, so we're just going to see the market move down. So I'm going to be very wary about this particular trade here. But that's coming out of the box Sunday, Monday, with downward selling pressure. So we could, in effect, if we do something like this, then I definitely don't even break the high. I definitely won't be buying down this level here. So there's three options straight away, three possibilities straight away. But the third one, I definitely would not be buying this level down here. And if we are rolling over this level, then you may look to be able to try and get some sell trade in to see this market roll over, simply because we've got this downward pressure here. Anyway, let's go and have a look at a bit of a bigger time scale. Very, very simple. Fib, swing high, swing low, fib, swing high, swing low, fib, swing high, swing low. Okie doke. We still have this 4300 level, which has been on my chart for forever and a day, and we still haven't hit it. So if we roll over and keep coming down, and we come into this 4300 level, depending on the time frames, I may actually be looking to take the call option coming down into this level. But this is a big level, and this is a level I've been waiting for a long time. So the 4300 is going to be the preferred buy on the pound, and hopefully hold this into the referendum, depending on how the market's acting, because it is gyrating pretty bad at the moment. So whether you know, I just leave a small bit on, or whether I leave the full position on, will depend on market behaviour and any particular polls that come out. If a poll comes out and the leave camp suddenly start tearing away, that trade's off the table. And just reassess. Just look at your fundamental data. The thing that's going to drive the pound from now for the next 3 weeks is the polls. Just keep an eye on the polls. If you see the leave camp gaining traction, then sell the pound. If you see the remain camp gaining traction, then buy the pound. And it's going to be as simple as that. Just find some stops and buy on any retracements, or sell on any retracements for that downward pressure. So that's the pound, that's the euro. USD JPY. Where are you? Okay. Let's have a look at USD CAD. Okay, so USD CAD finally looks like we might be making a move south. Now, an area that I am very interested in is it's been a long time since we've come down to this level here. I was actually expecting this level to be retested a long time ago, but it hasn't happened. This is an area I am very interested in, and that's the 618, and this is on the daily time frame. If price comes down to 2747, I am going to be looking to buy the USD CAD down at this level. If we roll over and don't go through 2747, I think back down here, I'll certainly have a crack at the 786, because 786 is always a very, very good fib. But failing that, 2452 is going to be a decent possibility. But for the meantime, 2747, we could see that this week. It's 193 pips away, and that's where I'm going to be looking to buy the stops below this bar here. Big pin bar, be a lot of stops below there. And we've got a trend line. Not really. So it'll be the 2747 USD CAD. Okay, let's crack on and bring USD JPY up. Okay, USD JPY. Okay, let's start with a blank chart. Get rid of that. Right. Now I was looking at, but obviously NFP came out. I think there's something like a nice trend line break, retest. This particular level, that 618 would have made a great trade had it not been obviously NFP and your fundamentals, you know, will just completely knock that technical trade off the table. Don't trade these levels. If you get a really bad number, don't, just because it's a 618 or a 786, just don't trade a fib level on a bad number. You're just going to get hammered. Regardless of how good the setup particularly is. If you get a number like that coming out of NFP, just walk away from the rest. Walk away from the screen for the rest of the day, because these levels are just going to get smashed. So potentially we have this level down here on the open. I'm not overly keen on it, to be honest with you, but it is 106.38, 106.40, maybe maybe a level to look at. The better level I like is below here, and the reason being is because of this nice pin bar here. So we're going to be looking at 105.58. Now just keep an eye on what's going on with regards to your news feeds, but if you are patient and you can hang on for 105.58, it may not come, but if it does, 105.58 is going to be an area I am very interested in. The reason being is we've had a downtrend line, we broke the downtrend line, it looks like we're going to come down, we're going to retest the lows here, and then we're going to look to move the market back up and go higher. So that's 105.58. But let's just see what happens on the open. So those are the trades. I know it's been a bit of a long-winded Forex weekly review, but I did want to get that options play into you and show you exactly what's involved with regards to how you buy options, whether it be a call option or a put option, what to look for the EU referendum. Get practicing. Unfortunately, I don't know if you can have a demo account, so if you are, just start with small trade sizes. Be aware of time decay. Longer you have an option, the harder it is to make money if the market's not moving. And then keep an eye on your spot market. So quick review: 106.40, 105.58 are two buy areas for USD JPY. Pound USD, we've got for the 4300 level is a very big level I'm interested in, and Euro USD we are buying 1320, which will hopefully be Monday morning, selling 1463. Okay, that's it. Finally, I'm going to ask for a bit of help. Actually, we've been doing these videos for a while, and we're getting some good number of views and whatnot. But if you do want to see more of these videos, what would really help me out if you would like this on Facebook and share this on Facebook. It does take a lot of time to do the videos, and obviously we do want to still keep doing them, but we need to know they're worthwhile. So if you could like them and share them, that would be greatly appreciated. Facebook page is Forex Investments. This is a example of our Facebook page. We do have a signal room, and we do managed accounts. But that's our Forex page, and any comments, or even if you want me to review any particular currency pairs you may have, then just throw them out there. I'll throw up some charts and show you what I'm thinking, and hopefully we can all make a bit of decent money off it as well. Brilliant. Okay, thank you very much. Bye bye.